Hey guys, February 10th, 2016. Let's look at the market in oil yesterday because it had a over 200 tick move to the downside. But let's just look at some plays that could have happened using market profile. I might chart open already. You see this green zone here? I drew this in a while back, and I'm not going to explain exactly how I found these levels, but there's zones and levels that I saw that were either bouncing off to the downside or bouncing to the upside, just meaning that there's a different sentiment in the market as far as the fair price at those areas, and markets will move either bouncing off those zones or cutting right through them. But most of the time they're bouncing, so those are areas or zones that I can look to either initiate a move or take profit. So it actually was a zone, if you can see right here in the 32 or 30 $30.20 level. Actually applied yesterday, and it was pretty neat. We had a low range, so we had your HVA kind of ranging, deviating here during the day, or the Globex session, your low value or LVA here at the bottom. And then you finally see this thing kind of launch to the upside, and it breaks above the high value area. You see this come back down. Your trade would have been here after it came back down into the high value area that you can see on both these price levels here on the 30-20 and about 30-30 area. But it also hit this zone, so you can kind of see that these levels were holding for a reason, and it did work out for a nice 10 to 20 tick move depending on when you got in, and with that you could have made some money. So, and it bounced actually twice off that level. But the key thing here is, if buyers are initiating the market, and it should be trending up if we're in a trend day. Sometimes we're in a range day, we wouldn't have known. One thing you can look at though, and you got to pay attention, are these levels that price kind of pushed really hard or initiated. It doesn't matter whichever direction. In this case, it was an up move, right? We're kind of ranging, kind of skewing to the more to the downside, then a huge move to the upside, came back down into the high value area, and that would have been a buy because the trend direction change. And obviously this was the top of the zone, and this would have been near the bottom of the zone. Now what happens is it doesn't hold, the trend doesn't continue, and instead it drops below it. So the first time you see how it kind of bounced over here, and it was, this is the third test, but it ended up failing. Once it fails, these buyers are probably going to be in a losing position, right? Especially those who are holding on and hoping for this thing to move up even higher. So, then you see this long bar to the downside, and then this thing really takes off, right? So this actually was a trade here once it kind of came into the zone and hit the top of that HVA because it came inside here. And then that was a counter move, which is a lower probability than a trade that you would go with trend, but it still worked out, and it came all the way back down. And as you're looking at this thing move down, you're looking at all these other key levels, all these other LVA or low value areas, right? Because these are levels that probably people are putting stops at, right? If you were a buyer, you would have probably put your stop at these levels here. But look what happens. It breaks all the way down to the lowest price that it ranged within the Globex market, right? And this is after the pit open on the East Coast, so it's around 6 a.m. And then it kind of hovered here for a few minutes and then completely broke that level. Once it breaks that level, once this last low value area is no longer a support area, for that day, for today, or yesterday I mean, once it comes back up, that would have been your short opportunity. You can see that it did kind of come within this low value and this low value area range, which was around the 29.95 to 29.86 area. And you can see as it came back up, came around in this zone right here. And maybe I can even draw something for you guys so you can see a little bit better. If I were to draw a little zone between these low value areas, you see how it broke below it, came into it, and then went down from there. And that was another 10, 20, 30, 40, 50, almost 60 tick move off of that trade alone. And that happened once it came into that zone. Let's count this bar itself: 5, 10, 15, 20, 25 minutes. Within 25 minutes, you would have been done with that trade, and between anywhere between 4 or 40 to 60 ticks you could have made. So that's about $400 to $600 per contract, just to make things easier, right? Same thing with this zone up here. Broke above the zone, came into the top of that zone, and your trade setup would have been, or to execute once it came to that zone, to buy for this thing to move up. Same thing on the other side, except for what happens is, what I notice is when the market is supposed to be going one direction, there's a counter trend move, right? And this should have held. If buyers were really in control of the market yesterday, this should have been the final hold for this thing to continue going up, and then we would have saw a trend up. It might have broken these areas up here where sellers were involved, and then this thing could have shot up to the upside. But instead, it breaks below this support zone, and it already confirmed weakness in the market here, right? Once it kind of came into that zone where initiating buyers were trying to move this market up, and then it ended up trying to bounce, and then a heavy bar to the downside, and then just shot right through all those support zones. Shot through the LVA here, shot through the LVA here, low value area, and then once it came through here, hesitated, and then finally shot through there. Okay, so at this point, your mindset should not be to be buying in the market. The trend is no longer up, it is down. You can see in the moving averages, the 20-day in the gray, the 50-day moving average here in the purple has crossed over and now moved down. So now you're looking to sell the market. Your first trade would have been right here for a nice 40 to 60 tick move, and then we come all the way back up. All right, same idea. Okay, now we're looking at a possible trend a reversal again to the upside. However, look at the level with the zone that I drew in here, and look at the level that it broke below initially, right? So if this thing broke below initially, and this market is supposed to continue going down, just like this market should have been going up, and it came back to this level and didn't hold, this level should be holding, right? Because this was the level that really broke down where the buyers initiated the market. So now the sellers have initiated at the market at this level. If price comes back to this level and it holds, it should continue to go down, which we see on the chart here. But in real time, that's the thought process that we would have to go through. And if it would have stayed here, hovered, and broke through to the upside, now we know that the sellers are no longer in control, and we could initiate and look for longs to buy into the market, and they could have went the other way. But it did not. And it happened pretty quickly. Within a 5-minute bar, you see this huge shoot up. A lot of buyers coming into the market, and that just got gobbled up by the sellers. Sellers completely stopped the market, or the buyers from moving it any further. Again, this is the area where sellers initiated, and then you see this thing continue going down, and you could have sold here for a small stop, because I would have put my stop a little bit above here. And that's within a 10 tick range right there, so a very small stop, and then obviously continue moving down here. If I were to move this zone, let me go ahead and move this zone to the right a little bit. Look how accurate this stuff works. Okay, so here's the support zone that got broken, that initiated sellers for the second time. This is, I would say, the first time. The second time, sellers pushed even further. Broke above here, which is fine, but this was the real level that we're looking at that shouldn't have broken, or ceiling or resistance area, and instead it shot down, right? Shot down into the zone. You saw hesitation, but it really broke down again. So if you missed this move here, your next trade setup could have been at this zone here, because look what happens. And it really did happen, right? It broke below, came back up, right? And if your idea here is the sellers are still in control, your next trade setup or idea would have been, as it came back up into the zone, you could have sold again here, right? And that's a nice retracement, right? Once you see this thing at the 2090, 2080 area really break down, and then it just drops all the way down to, what was the low of the yesterday? It was, let's look at this, 2774 looks like, right? If you, let's just look at and break it even here, the 28 level, 29, 30 from where it really initiated up here at the 32, 30.2 I mean. That's an over 200 tick move right there. So pretty amazing how that worked out, and that all happened within, you know, a 2-hour time frame, looks like, you know, maybe a little bit more like a 3-hour time frame, I guess, if you really initiated the trade at 10. But just to kind of give you an idea of how that kind of works in the psychology of the market, and the psychology or the thought process that you need to go through when you look for trade setups and what the market is doing. So if you're a buyer and you're going with the buying, that's fine. Take your profits as it goes up, right? But if it goes and reverses against you, you got to go through the same process and think, all right, now where would buyers be hurting? Well, obviously right here initially, because there was a lot of support here when it bounced. But after the third test, it broke it, right? Then you go, okay, where are my next levels? Obviously my low value area here, my low value area here, and then the lowest price of the day, which is right here, okay? Then you see this thing break down even further. All right, now my thesis is now market is obviously trending down, right? And it's going to continue further. So where's my next setup? Well, let's see this thing move down, and when it retraces back up in this level, which was my low value areas that was broken before, which I talk about in my videos, let me go ahead and sell again here in this area. Pretty tight stops. This was about a 10 tick range right here within the zone. So if I would have initiated anywhere in between here and had a 10 to 13 tick stop above here, even up to the 31 level, could have initiated this initial move for a nice 50 to 60 or 40 to 60 tick move, depending on when you got in. And then when it reversed again, came back up to the level for the higher probability trade, for this nice retracement up to this zone, and your last resistance area for the day, that should have held if it was continue going moving down, and which it did. This would have been another trade setup right here, right? If you would have missed that, you look at the zones here, right? Because we're reading that, you know, you're not reading this at this point, right? We're reading it as it goes, right? And we're seeing this stuff happen in real time. If you can analyze the market this quickly, that's great. But that's how I'm walking you through this, so you can kind of come up with your own process for this. But here you go, comes up in the zone and then drops. So I hope you guys got a little bit out of that video. Pretty neat how the market works. Oil's pretty consistent with the trade setups in this area as far as support and resistance using market profile or volume profile and such. So continue learning. I hope this gives you a little bit of an advantage or edge in your trading. I don't know exactly what you guys use out there. Please leave a comment and let me know how else I can help out. You know, I'm still developing my ebook and courses and things I want to do to really help people out in trade and have a real edge in the market. Of course, it's always easy to analyze the market after the fact. So take that in consideration. It's a little bit difficult to do this in real time. But once you get an idea of how this stuff works and you see the patterns happening over and over again, this stuff will sink in, and then you guys can analyze the market yourselves in your own time zones and your own trade setup. So hopefully that helps out. I really want you guys to make money in the market, okay? So with that said, I'll close this video out, and we'll talk to you guys soon, all right?